And happy Friday. I hope everybody is having a great and wonderful week and hope you have a great weekend. Hey, I'm going to bring out two new programs for you. One's actually a pretty old program, but one just actually came out in the last week. I know some of you are going to groan a little bit about these programs, but we're definitely not going to 2008 yet. But these are definitely some programs that have some solutions for clients and borrowers. So the first one we're going to look over is the Community Development Program or the Community Lending Program. This is a no income, no debt ratio program. So let's go over this a little bit here. First of all, you gotta have a 640 or higher FICO score. It can be for primary residence or it can be for secondary homes. You don't have to necessarily be a first-time home buyer for this. The underwriting is based off of loan to value, FICO scores, and liquidity. So what that means is we are not going to bring in any income documentation, any employment information, or any salary or hourly or anything like that. This is not necessarily a liar's loan per se when we talk about 2008. So we're not going to say somebody at Walmart's making $200,000 a year on this one here. We're not putting income in there in any way, shape, or form. So the debt to income ratio is not calculated. Down payment is required, so you're going to look at anywhere from 20 to 30% depending upon credit scores. And they need to have reserves, so anywhere from 3 months to 18 months. And an example of this would be if somebody had a 740 FICO score, they would need to put 20% down and they would have to have 2 months of PI or 3 months of PITI in reserve. And that reserve can be checking, savings, stocks, bonds, IRAs, 401ks, cryptocurrency, as long as we can source the cryptocurrencies, retirement funds, items like that. They do have to take a first-time home buyers class, even if they're not a first-time home buyer. It is a 30-year fix, so there are no prepayment penalties. So these are not like these are funky ARM loans. The payment, pending taxes and insurance, is always going to stay the same, and then they can refinance at any point in time down the road. As with most loan programs, you can do up to 6% of seller concessions. Of course, when sellers are deciding to do concessions, and actually we're starting to see some contracts come in with sellers agreeing to some seller concessions. And believe it or not, it's actually certified by the United States Treasury, and it's exempt from Reg Z and the ATR rule. So Reg Z is kind of the Frank Dodd rule that happened in 2015, and ATR is the ability to repay rule. Kind of interesting. So who does this really go towards? A self-employed or a small business owner. We know that self-employed people, they put all their gross income and then they deduct the heck out of it so they don't have to pay a lot of taxes. Or in a situation that's recently come up with us, the borrower is a very, very heavily cash-based borrower, doesn't necessarily tell the IRS about all the cash that they bring in. That's between them and the IRS. And so we are unable to qualify them. Now we can. Volatile or regular income, seasonal or gig workers. So seasonal workers actually come up quite a bit. We have people that put in just landscapers, as an example. They put in a ton of hours between March and October, and then they become ski bums for the rest of the year, and they don't work. Gig workers, other workers that come to mind is truck drivers. Truck drivers, again, if they're a lease truck driver or a mileage truck driver, they have huge amounts of gross income, but on their Schedule C or in their other tax returns, their 1065s, they deduct everything off. And so their net income is fairly low. Owners and employees of cash business. This is coming around to the marijuana depositories, so like in Oregon, I'm licensed in Oregon. They are a cash business because of government regulation. It's super, super difficult for them to get any type of banking or financing. Newly self-employed or people with disqualifying income. So not a bad little program, not for everybody again. The next program has actually been around for a long time in the investment world or the commercial world, and it's just coming into the investment world, and it's debt service coverage ratio or DSCR. Investors only, cannot be for primary residents, it's investors only. And basically what you're going to do, or what we're going to do, is we're going to see how much the house rents for, and then how much their mortgage payment is. If the rent 100% or more covers the house payment, we got a loan. And what it's going to look, where we're going to look at is principal, interest, taxes, insurance, HOA, and some other fees. And as long as we're 100% or better, you're good to go. 85% or higher, so they got to bring in at least 15%, depending upon credit scores. 660 or higher FICO scores is required, and they do require 6 to 12 months reserve for all properties. So if they have 2 properties and they have a high FICO score, they may have to have 6 months reserve on each one of those properties. But typically, somebody in this level has those reserves. The terms is 30-year fixed. There's also a 30-year interest only. So 10 years is interest only, and then the other 20 years amortized full principal and interest. There is also ARM loans available, 5, 6, 7, 6, 10, 6 ARM loans, and you can do 1 to 4 units. Kind of the overall picture of this one is there are options. There are more and more loan programs coming out, some goofy, some not so goofy, like we talked about last week with Idaho Housing's down payment assistance programs. If you get a borrower that is not qualified with other lenders, give us a call. Let's see if we're unable to qualify. Being that we are a mortgage broker, we have a lot more programs than, say, the credit unions or the retail guys. Also, if you ever have questions on a file, either my file or a file that is not yours, please use me as a resource. That's what we're here for. We're educated, we're experienced, we're here to help you out. Hey, thanks again. You guys all have a great and wonderful weekend and enjoy the sun.